Good morning or afternoon, everyone, and thanks for joining us today. Welcome to the GO2 People Half-Year Results Investor Conference call. We've got all attendees now in listen-only mode. On the call today, we've got GO2 People CEO Sean Murphy, the Chairman of the company, Darren Cooper, and Director John Manning with us as well. I'll pass you across in a moment to Darren, who will kick off our discussion of the company's half-year results. We'll have a presentation today, followed by an opportunity for Q&A. If you would like to ask a question during the call, please type it into the Q&A panel within your Zoom app. So to kick things off, I'll hand over now to GO2 People Chairman Darren Cooper. Go ahead, Darren.
Thanks, Tim, and thanks everyone for joining us today. GO2 People is an interesting story, and the start of that interesting story is that we've only just recently begun investor relations activity again for the first time in a couple of years, and I'll tell you why that is in just a moment. But if you think it's been a while since we've held one of these webinars, you're right. In fact, I think this is the first significant investor activity that we've done in the last 3 years, if I'm not mistaken. Let me just quickly take you back through the history of the group. So prior to 2017, GO2 was actually two privately owned labour hire businesses, one in WA, one in Queensland. The two of them came together and were listed on the ASX in late 2017, and I joined as board chair at that time. From 2017 to 2020, the main aim of the group was to strive for $100 million in revenue, almost exclusively from labour hire, and in doing so, realise the economies of scale and the bigger, better client relationships that came with $100 million revenue, and hopefully thereby as well becoming more relevant to investors on the ASX at that $100 million revenue mark. Getting to $100 million in pure labour capital in funding the working capital cycle, and along the way experience some client relationships that, let's say might not be as enjoyable as you might like. So across 2018, 2019, we thought strategically about the business, and we realized that businesses that do well in this space do well because they have more than one offering to their clients. They're not just labour hire. They're typically labour hire plus other things as well. And we recognized clear opportunities in the space of executive recruitment, in training, in apprenticeships, and in government contracts. And so in 2021, the group made two acquisitions. One was called Hunter Executive Search Consultants, which, as its name suggests, does mostly C-suite white-collar recruitment. And the other one was called Skill Hire, which was mostly a training-focused business, mostly registered training organisation, RTO, group training organisation, which means apprenticeships, and significant government contracts in areas like transition to work, for example, and job ready activities. It's no secret that in late 2021, shortly after those two acquisitions, we encountered some problems with the Australian Tax Office to do with late superannuation payments. So in circumstances where all employees had been paid super, albeit late, we found ourselves in an unfortunate part of the Superannuation Guarantee Act that says that if you pay super late, there can be significant penalties. So they were declared to the ATO in late 2021, early 2022, and also declared to the ASX. But whilst 2021 was our year of acquiring extra businesses to expand the GO2 service offering, 2022 was really the year of us stabilising the business, negotiating with the ATO for payment plans for those unexpected liabilities. And pleasingly, in late 2022, about September or October, we managed to get all of our ATO liabilities under agreed longer-term payment plans with the ATO. And you'll see in the Appendix 4D that we've just published our most recent balance sheet at 31 December. A lot of those ATO liabilities have gone from current down to non-current, reflecting those payment plans. We're very excited about the business in 2023 for a few reasons. This is the year, and only just really the last 6 months have been the period where we've started to be able to realise the vision of that integrated business that we set out to achieve, where we can offer our clients a full suite of services, including labour hire, white-collar recruitment, training and upskilling, apprenticeships, offer them a transition to workforce. And in an environment where basically the whole of corporate Australia is scrambling to fill a workforce, we can dip into different labour pools that other providers don't necessarily have access to. That obviously lets us have broader and stickier relationships with bigger clients. And Sean will talk through how the rubber hits the road in that space as part of our presentation. The other thing that it has let us do as well is that the skill hire business, when we first bought it, had the benefit of some very significant government contracts, which unfortunately went the other way in early 2021, pretty much coinciding with a change in government attitude to take a lot of those sorts of contracts from the private sector into the not-for-profit sector. What that has done is give us the opportunity to build out a much more commercially focused business. So whereas historically a large proportion of the skill hire business's revenue came from government contracts, increasingly the skill hire business is winning its revenue from broad relationships across the group with other areas that we offer, like labour hire, for example. So I hope that makes sense. You'll understand it more as we go through the presentation. And of course, this has given us the opportunity to better tell the story of the group too. Now that we're starting to realise the vision of that integrated suite of services, it's an appropriate time for us to get out and tell the story of GO2 and the business that we've become today. And I think in not only the Appendix 4D, but also the 4C that just preceded it, you can really start to see the story coming through there of better client relationships, better blended margins. So with that, I'll just dip into this presentation. So as you can see there, we are basically a people business. We put about 1,000 people out to work every week, and we're very passionate about doing that. Not only do we think that we're a great business, we think that we do great good as well. You can see that there's been a 203% increase in revenue from FY21 to what we're forecasting in FY23. We think at the end of FY23 will be a 90 million plus revenue business, and you'll see for the half year, we've already basically achieved half of that. So we're well on track. Sean, I might throw to you to take people through the business itself.
Yeah, thanks, Darren. Look, if we start with this slide, I think it's worthwhile just commenting on sort of how we're trying to build a business that can provide ongoing sustainable profitability. And I think the key to that is having one that's underpinned by a purpose-driven culture. So there's been a lot of focus on that initially, within skill hire, and now the broader GO2 people group. And as you can see, the values here are on the page, but they've become a real compass for us, and it's really started to get some traction. And we've now got a business where everybody understands the impact that they have, and there's been a lot of work to make that happen. There's no commissions other than a small exception within Hunter Executive, but broadly throughout the business, which is quite rare, people are engaged and feel rewarded and valued without having to introduce that commission-based scheme, which typically is heavy on admin and drives a culture in and around me and I rather than us. So that's been a real focus for us, and that coincides with the overarching strategy, which is to have a multi-service approach to servicing our clients. So instead of BHP just engaging us for training, which is the current situation, let's have a situation where we can start to support them with their career pathways and building a workforce with the whole suite of services that we provide. So as you can see, there's a lot of blue chip clients there, and I'll talk more about our focus in regards to NARA training, specific to how we're actually engaging with a lot of these clients right now. But yeah, if you want to flick through, Darren, I think it's worthwhile. We kind of sort of spoke about the acquisitions there. I think it's worthwhile just providing a bit more context in terms of the business. So if we stick here, I might just dance through the service offering, because we, as Darren said, we haven't done a lot of this investor relations, and I think a lot of our existing shareholders may not even understand exactly sort of what we do and how it all dovetails together to provide this vertically integrated suite of services. So as Darren mentioned, we've got our government contracts. We still have a lot of those from Broome down to Esperance, and they are primarily based in the regions through Albany and Geraldton and Narrogin and Katanning and the like. Transition to work is one of our 3 contracts, which we're doing quite well, and we're amassing more clients as we go by way of bringing Group 2 referrals into the program. It's a mentoring program for youth from 15 to 24. There's 2 other contracts that we have with the department which haven't had any revenue at all for the first 6 months of operation from June to December. There's obviously been a change in federal government and a change of attitude towards the tenders that were awarded. Pleasingly, career transition assistance and employability skills training contracts have turned back on, and we're receiving referrals into those training programs late January and into February. So they've started off really well this calendar year, and we expect them to continue on. But in terms of that space and growth trajectory and how do we get more contracts, really our strategies in and around relationships and service delivery and best positioning ourselves so that if there is reallocation of contracts that we're best placed to pick those up. But pleasingly in that space, we're giving opportunity to those that need a hand up. It really helps us in regards to delivering for our clients with any entry level roles in particular. And more so when we combine it with the services and the capability of our training business. So I'll move to there, and we really have 2 sides to what we do in the training business. One is all of our high risk training where we do in Bunbury and Perth, the dogging, rigging, traffic control, forklift, etc. And the other is the certificate training where we're now doing a lot more training of apprentices in civil construction, warehousing, supply chain, surface extraction in mining, business and admin and customer engagement, starting to do a lot more WHS supervisor training as that becomes a requirement. And then obviously we have been known quite well for carpentry and for bricklaying, and we're just adding to scope there. So you can see when we take unemployed people, we're upskilling them and providing these pre-employment programs. They're hitting the ground running. The amount of attrition when it gets to our clients is much less because we've filtered out those that might not be ready. And then the other 2 businesses are our apprenticeship business, where we've got a ever widening range of apprentices. So traditionally, it's always been in that residential construction, and moreover, in the last year, we've really diversified. We have a lot more civil construction apprentices, and that's growing really well. Surface extraction, as I mentioned, business admin, even warehousing. Like we're really trying to broaden the cross-section of industries that we supply through our group training organisation, and really trying to align them with where our training capability lines as well, so we get more bites of the cherry. Recruitment under the 3 brands, GO2, Skill Hire and Hunter Executive is the last area. And that kind of rounds things out. So we really can service our clients from school children all the way through to CEOs and retained work. So I think it was worthwhile just sort of providing a bit of an overview of the business in terms of its capability. Here we can see the locations and where we're at. I think there's some key metrics there. We tracked in 2022 how many people we actually supported, and almost 16,000 people come through the door. Lots of them through training programs, lots of them being placed out with recruitment. Darren mentioned we're payrolling about 1,000 people a week. I think the number's close to 1,100 this week. So, strong growth there. And the strategy is largely around building out the value proposition in the areas other than WA. In Western Australia, all of our service offerings exist and in full, but we've got a nice beachhead in Brisbane that we want to fully build out by way of more apprenticeship and more training opportunities in particular, and obviously keeping an eye out for opportunities in the government or the workforce development space as well. I wouldn't mind, as a sort of next part of the presentation, speaking to a few examples of where these come together. So on slide 12, Darren, that we've got these multi-service kind of examples, and there's 3 here in 3 different industries, which give a bit of colour to how we want to be known going forward and the types of conversations that we're having. So with regards to advanced traffic management in the traffic management space, we started in February last year. We've got about 310 employees out through our labour hire business. There's been a significant number of people that we've trained to be new to industry. So as of the time of putting this out, that was up over 200, and they also go through white cards as well. The interface with our government contracts is strong, and we're getting a lot of opportunity for those long-term unemployed, but also ex-offenders and other talent pools that we're connected with. And so you can see, especially when you move your civil construction apprentices through there for a few months, you start to get some great traction across the business more broadly. A couple more examples. Metcash, we did work through skill hire for 10 years. Exclusively, it was only picker packers. We've increased that number to be more, from what was 100 about 12 months ago to 171 today. And we've pleasingly started supply in South Australia. But moreover, in terms of describing how this multi-service approach starts to get traction, we've started doing a lot of pre-employment programs and getting people from unemployment ready for work. And these 3-day pre-employment programs are proving to be effective in terms of the stick rate when they go out there. We might start with 15 in the course and 5 might get a start, but they've proven they've got the right attitude and they're ready to go. We're doing a lot of training out there as well. We're up to 24 supply chain and warehousing Cert 3 trainees. We've got some trainees out through the group training organisation, and then pleasingly, Hunter Executive did a retained search for their logistics and operations manager just recently. So you can see all 5 of our businesses are all interfacing with Metcash. And the last example is the Bunbury Outer Ring Road that we've profiled in some of our recent releases. Again, heavy involvement with our government contracts, and we've supported their Yucca Danju program, which is all about opportunities for long-term unemployment. And I think we're up to 131 graduates through that program. And we've moved, I think we have 61 employees on the contract at the moment, starting to do a lot more apprenticeships and training like traffic management and white card and the Cert 3s, et cetera, et cetera. So just a few examples, which I think gives some colour to that multi-service approach. Darren, you want to pick up in terms of some of the metrics on slide 13?
Sure. So we've set out a couple of bits of information here that are hopefully helpful. The table in the top left shows the trajectory of revenue and EBITDA, and you can see where we've come from. I should point out that the second to last column there is the half year. So as you can see, we've declared 43 million of revenue for the half year just finished. EBITDA of only 0.5 million deficit, and after adjusted for historical one-offs, 242,000. That half year itself is a tale of 2 quarters. And if you go back and reflect on our most recent 4C, you'll see that in the quarter to the 31st of December, we actually generated about 970,000 in EBITDA, which is our closest proxy for cash. So at the moment, our forecast of 90 million plus of revenue for FY23 holds. Of course, we'd like to beat that. The table in the bottom left gives an idea of how the revenue might be composed across the different service offerings that we have in that first row. And you can see the second row gives an idea of typical gross margins from each of those businesses. So I mentioned this in the opening, but typically labour hire is a high revenue, low margin activity. Notwithstanding the margins that are shown there, these are actually based off our budgets for the current financial year. We're actually exceeding those recruitment margins at the moment. They're up more around the sort of 11-12% mark. Which comes through better integrated client relationships, as Sean has talked about, And you can see the higher margin activities there, like training, for example, and executive search have much higher margins than labour hire. And this is where on the pie graphs on the right-hand side, the left hand of those two pie graphs is probably the most relevant one. So this is a combination of that margin revenue composition and the gross margin, and shows you the gross margin split by dollar value across the group. So although labour hire is a very significant revenue contributor to the group, you can see there on a gross margin basis, it contributes about 28%. And when combined with the other business units, it shows you that we really do have a good spread of gross margin earnings across the different streams of service that we offer. Sean?
Thank you. I think the next couple of slides we've released on the ASX in terms of some of the performance up to date and the like. What I might talk about is some of the growth initiatives before we again sort of throw back to you and point to some of the graphs on slide 16. So I mentioned to you the focus on this multi-service approach. And so that's really a key for us, in particular, focusing on improving the performance of our high margin businesses, specifically training and Hunter Executive. The first strategic project we put a lot of effort into from about November onwards is really starting to get some traction. And I think our shareholders will see the results of that going forward. And what we realized is that within the high risk business, we've got 750 clients, and they're quite one-dimensional. There's a lot of upside and a lot of opportunity to build those relationships out, and predominantly they're in the mining, construction, infrastructure space. So we've started to do that. We've also got a bit of a program whereby we realised we missed out on $1.8 million of revenue, which would have almost wholly gone to the bottom line in the high-risk training business through seats in our existing courses that were unfilled. So if we've got a forklift course that can take 8 people and we're only averaging 4, that loss of revenue, especially when you consider the fixed cost of the full-time trainer, the rent, the equipment, it's all paid for already. That's an area that we're really focused on, and I'm hopeful of providing much better news in regards to the performance of that business. And that's involved a whole host of things, opening up Afterpay as an option, significantly better internal referrals from our recruitment team. If they're placing somebody into a warehousing role or a traffic management role, candidates are doing forklift or traffic management training first. A lot better key account management conversations and personalizing that through our marketing and business development team, etc. And the last thing that's really made a difference is recruitment of trainers, having the full complement of core trainers that are full-time, and now being in a situation where we've got a couple of casual high-risk trainers in both Bunbury and Perth, has not only allowed us to cover leave, but also supply when there's demand for additional courses, and even in regards to on-site training. So that's been really pleasing that we've been able to improve the performance there, and that's a strategic project that's really getting some momentum. The expansion of Hunter Executive is something that's also been noted by way of our releases, with the small acquisition of a business in Queensland, and having Nick Connolly join the team there. The addition of extra resources here in Perth and the maturing of the team in Melbourne, that's something that we would like to continue. We see significant opportunities for Hunter, given it's got a great foundation and a great brand and great reputation for us to sort of relaunch that back on the East Coast where they were before. Similarly, we'd like to grow our traffic management interests over there on the East Coast. We're preparing to capitalise on the fact that we've got about 75 to 80 Boilermaker welder apprentices. We'd like to do the training ourselves for that. So we've been investing in that and building towards that for about 4 months. And we think that will be an exciting addition to our training capability this financial year. So yeah, that's kind of just some overviews of the key. And we've also mentioned that we're on that government side in terms of getting access to overseas workers. we've just released recently that we've been approved as a sponsor of visas, and we're making our way through a couple of hurdles to be positioned as an improved employer who can supply overseas labour through to our clients here, because there's significant demand and significant interest for that. So that would probably be the growth initiatives that we're focused on in the short term. And maybe I'll throw it to you to talk more about those graphs on slide 16, Darren.
Sure. Once again, these were from our recently quarterly 4C, and I mentioned that the half year just finished as a tale of 2 quarters. So if you look at the graph on the left, this is showing cash receipts from customers by quarter. You can see that we've built from June at about 21 million to December at about 22.5 million, putting us well on track for that pathway to 90 million and beyond that we've mentioned before. Probably the more important graph is the one on the right-hand side. So this is where we track our gross cash margin from customers. That's the blue bars. So that's cash receipts from customers less direct costs. You can see there tracking quite strongly. The June quarter, we did a figure of sort of about 2.5 million. That's grown to the end of December at about 4.5 million. This comes with broader client relationships that we've talked about before, and it comes through margin improvements with existing clients. Both of those have been a key focus of the business over the last 6 to 9 months. Very pleasingly, the green bars show what we call our net cash operating margin. So this is basically the blue bars minus advertising and marketing, staff costs, administration and corporate costs. It's effectively our closest proxy for EBITDA. And you can see it tracking there from about $1 million negative in the June 22 quarter to that number in the December quarter is $970,000. What we're also pointing to there is not only the magnitude, but the trend, which is a trend that we're aiming to continue. Sean, I might just stick on this slide for a minute. So this is the corporate snapshot of the group. You can see that we've got about 418 million shares on issue, and at our current share price, it gives us a market capitalisation of $4.6 million. We think there's a few things that have contributed to that, but what we do know is that a business in our space, pushing in excess of $90 million with the sorts of clients that we have, probably should see a market cap higher than that, and that's certainly something that we're aiming to achieve over the short term. Sean, was there anything else that you wanted to touch on in terms of the business?
Oh, look, I think the only thing before we take questions is in line with some of the trends that you just showed there. It's certainly a broadening client relationship, and it's certainly an increase in margin that we've been working towards. And this is the time for us to do this across most of our businesses where there's a skills shortage and we're able to supply. And we've proven we've been able to do it in different ways and better ways than some of our competitors. But in addition to that, I think some of these trends are coming because of the rigor around cost management. And I think we've sort of shown over the first 6 months of this financial year, we've taken our internal internal wages from about 11 million to an 8 million run rate annually. So I think that'd be the other thing worth highlighting. And we believe that we're well positioned and right sized to accommodate some additional growth in this half year with the base that we have at the moment. But otherwise, I think we've kind of covered a fair bit of territory, and happy to see if Tim's got some questions for us, Darren.
Sure. Thanks, Sean. Tim, over to you.
Yep, very good. Thanks, Darren. Thanks, Sean. Excellent presentation. So as a reminder to all attendees, if you do have questions for management, please pop them into the Q&A panel at the bottom of your Zoom app, and we'll hop through them that way. First question here is asked us if we're able to provide an update on the apprenticeship division. The question is, how quickly do you expect this division to scale up on the East Coast? And what sort of industry groups is GO2 targeting in apprenticeships?
Yeah, okay. I might pick that up. Look, broadly in the apprenticeship business, we've recognised it's quite strongly relationship driven, and so we're pleased that we've had a stable team with no flux in the field offices for about 18 months, and that's proven to really help. Our retention of our apprentices has gone from about 40% to about 71% recently, and we're keeping them on average from 21 months, about 12 months ago, to 27 months now. So the trend is great in terms of our operational delivery and support of our clients and our apprentices, and that's shown with a steadily building headcount. I think the look ahead in terms of the East Coast, we've got a great order book here with open roles, and that was boosted by the client engagement with the Apprentice of the Year award. But Queensland would be the next area of focus. We can build up to 25 apprentices over there without having a group training license, but we are well progressed in terms of attaining that and being able to then access the increased government support and funding for those apprentices. Look, in terms of timeframes and what I would expect, we've released before and notified people that we're pleased to have engaged a state manager there called Josh Sexton, who has experience running RTOs and group training organisations in the past, and we did that quite deliberately because it is our intent to fill out that value proposition over there. So I'd be expecting that we're going to be getting some traction in that space this half year, and that's the plan in terms of having some apprentices on the ground.
Sounds good. And Sean, so just still on the apprenticeship division, I know you touched on this just briefly in your answer, but there's a question of what level of state government support there is there to support your scale-up ambitions.
Yeah, and I realise I missed the part about the industry sectors as well, so I'll answer that first. We'll likely stay in our close to our knitting. We're very familiar with civil construction, and the like, metal fabrication, warehousing. They'll be the same industries that we focus on over there, especially as we intend to follow that up with training capability. In terms of government support, as you get your group training organisation license, then you get similar support as you do here in WA and South Australia, where we currently operate. So that's by way of, and it can be quite varied. So it's a difficult one to answer. For instance, there's the equivalent of the Construction Training Fund over there, and they provide support when you've got construction-based clients. There's the New Energy or Green Energy Apprenticeship Scheme, where if you've got apprentices in those kind of industry sectors, in solar and wind and the like, there's additional incentives. There's still a defence-based incentive. So there are a number of ways in which we can make the hosting of apprentices more affordable for our clients and more achievable for us through those government incentives.
Excellent. Just got one more question here. Sorry, Darren, go on.
I can, yeah. We ran through these examples before, or Sean ran through these client examples. And I think it's just worth emphasising that where we service a client with multiple service offerings, we earn multiple fee and revenue streams from that client relationship. So this is not a bundled arrangement where we have sort of everything all in for a fixed fee. As our clients, be it ATM, Metcash, Bunbury Outer Ring Road, or any others, choose more offerings from our menu of services, that earns incremental fees and incremental margins for the group. I think it's just worth emphasising that, and it does make us a bit unique when we compare it to some of our listed peers, that the extent of that integrated service offering that we can provide to those clients. And look, it obviously has particular resonance in industries that we like to target, which are high value, longer term engagement industries like mining and infrastructure construction and those sorts of things. I thought it was just worthwhile emphasising that point.
Definitely. Thanks, Darren. Just back to the questions. We've just got one more question with us for the moment. So if anyone else on the call does have further questions, please pop them in now. The question, Sean, is about workforce development. And the question is, what is the strategy to re-enter the workforce development contract space meaningfully and substantially?
Yeah. So I think I touched on it earlier. It's a difficult one because it's all tender based. So it takes a different strategy. We're focused on service delivery, and I think that that's proving to be working really well. If you look at transition to work, we started with 120 young people that we were supporting. I think we're almost double that now, and admin fees are going up every quarter as a result, which is really pleasing. So that performance piece is critical. And look, we're only a small player in a quite big pool, big pond, big industry. However, we've invested pretty significantly to be well positioned to pick up new contracts. So we invested more than $500,000 into getting ISO 27001, and we're told by the department that that's a key requirement for servicing their contracts going forward. We've continued to invest in our compliance regime and passed our quality assurance framework audits recently. And we continue to do that even when businesses that have the level of our contracts may choose to not, from a commercial perspective, with a clear intent to have us best positioned to pick up any other contracts that may become available as they as and when or if they choose to reallocate. So that was probably a big part of the strategy, and the other part is just relationships and making sure that we're responsive. We've got multiple people, including myself, that are meeting with the department regularly. Our general manager of growth projects has a finger on the pulse in terms of all opportunities in this space and grants and different packages and programs and tenders. So my personal view only is that I don't, I can see this going to re-tender at some point in the near future, maybe within 2 years. Obviously the change of government, and they've got a different approach to servicing the unemployed and the long-term unemployed. So they would be the things that I would point to in terms of us being best positioned to try and re-enter the market more meaningfully than we currently are.
Sounds good. Thanks, Sean. One more question just about margin structure of the group. The question is, with workforce shortages Australia-wide, why are the gross margins down where they are? And you talked to the strategy to try and achieve margin expansion over time.
Yeah, we inherited a lot of legacy contracts, and we've at the right time we have an opportunity to renegotiate those. We have been successful in moving those up, as Darren alluded to. The gross margin quoted there is 7 to 9% in recruitment. And as Darren said, we sit around 12% now, which is a fairly big improvement. We're at the top end of that banding with the apprenticeship business as well. And the question points to a valid sort of strategy whereby right now is the time where if you have product on the shelf, if you have the ability to recruit and to upskill people and supply labour, then you should be rewarded appropriately, because it's a more difficult task to do so. So it's certainly something that we're pleased we're moving in the right direction, but it's something that we continue to focus on. And we've even implemented a new structure recently when we quote any recruitment or apprenticeship based clients, where we've got a scaled structure whereby if their payment terms are much better, then they'll get our standard margins, which are more improved than what you see here. But if they want to extend those payment terms, whereas we've previously given one scale and they pay the same regardless, we're starting to get significantly higher margins, in particular when the payment terms are stretched at the client request. So yeah, a good question, and certainly an area of focus for us.
Yep. Sounds good. Thanks, Sean. So that's the final question that's come through for the moment. So I might just give the attendees just a few moments just to pop any final questions in, and we'll just see if anything comes through. So let's just give it a sec.
Is this where the elevator music starts, Tim?
I could pipe that through to my phone. That might be handy. Yeah, I think we'll draw a line through it there. So on behalf of the company, I'd really like to thank everyone for joining us today. Really appreciate your continued interest in GO2 People. if we have a question, if you have a question that we didn't answer today, please reach out and management will be happy to discuss further offline. We will also look to make the video recording of this session available online. Just one final point, Darren and Sean, I thought maybe it could be handy just to remind listeners about the capacity to place the shortfall from the rights issue late last year, and just give people an update as to where that's gotten to on foot with the exercise open for the next couple of weeks.
Sure, Tim. Yeah. So as you will have seen, just before Christmas, the directors between them contributed $140,000 in fresh equity into the company under the rights issue process at a price of 1.2 cents. We're currently out marketing that shortfall placement at 1.2 cents, and that's open until the 15th of March. As I mentioned before, we've only really been doing investor relations activity for the past sort of couple of months, I guess. But it's fair to say that we do have a number of parties that have taken an interest in that shortfall placement process. We obviously can't guarantee an outcome, but we'll know more on the 15th of March, obviously. So if there's any investors on the call that would like the opportunity to participate in that, just reach out. Probably the best email to use is the one down at the bottom left of the screen there, investor@thegotopeople.com.au.
Very good. Thanks, Darren. Thanks, Sean and John. And so, Sean and Darren, I might just pass back to you for any closing comments.
Yeah, look, from my point of view, I think I'd probably emphasise that it's only really the last 6 months that we've had the opportunity to start to realise the vision of a full service offering business. And it's in the last 6 months that we've really started to see that proof of concept coming through. So we're very encouraged by the trends that we see emerging now, particularly in the 4C. I'll continue to point to that more granularly quarterly kind of measure of the success of the business, I guess. And I think in the metrics that we're seeing coming through now and the sorts of client discussions that we're having, we really are seeing proof of concept of that integrated service offering across the group. The couple of things that have got us particularly excited at the moment are obviously doing more business with existing clients, opening up the full suite of service offerings in Queensland, similar to what we've got here in WA. And we really are looking at that PALM program as being a potential exciting one. And as we've announced, we're very close to the end of that accreditation process at the moment. So looking forward to good things there. Sean, anything you wanted to add to that?
I think you've covered it pretty well. You know, I'm really proud of what we've been able to do in 2022, given the distractions. It was a really challenging year, but a lot of the background work is what's positioned us to have a lot more fun in 2023, which I hope will come out in the results that people are going to be seeing going forward. So, yeah, I think that kind of covers it.
Very good. Actually, you know what? Just while we're on the call, notwithstanding the fact that you've just signed off, one final question has come through, so I think maybe we'll just take it before the buzzer. The question is, ask you to explain what your strategy is with regard to NDIS, the National Disability Insurance Scheme.
Yeah, so we, how much can I say? We see care as a really interesting and large opportunity for us. We do have a lot of bits and pieces on scope, training programs, etc., which point directly to the care space. So we're approved through DTWD to do the entry into care skill set and to help people new to industry. We also have the Certificate 3 for support workers on scope. It's not something we've done a lot of, but we have some very meaningful conversations in that space. We are progressed through the process to get NDIS registration, and we'll announce whether we're successful in that in the near future. And that would give us the opportunity to then provide a number of services into that sector. So it's probably something that's more Q4 of this year than the current quarter. But we think once we get that NDIS registration, it's going to open up some opportunities for us to move into another industry sector, which we see large prospects for going forward. So that would probably be as much as I could say there, I guess.
No worries. Exciting times ahead. All right, well, we've done our sign off. So thanks again for the presentation, gents, and thanks to all attendees for joining us, and we look forward to the chance to chat to you again soon. Cheers.
Thank you. Bye.